Hi, welcome to my channel. In this video, we will talk about conceptual framework and accounting standards, particularly the development of financial reporting framework and standard setting bodies. I am your lecturer, Professor Dale C. Ison, CPA CTT. But before we jump in and talk about the accounting standards and IFRS, let us first discuss or define what is accounting. So according to the American Association of Accountants, accounting is the process of identifying, measuring, and communicating economic information to permit informed judgments and decisions by users of the information. Take note of the three important activities included in the definition. These are the identifying, measuring, and communicating. Now that we've learned, or actually we've recapped the definition of accounting, let us now link it on why it is important to have a uniform set of financial reporting standards. The Philippine Financial Reporting Standards, or your PFRS, represent the generally accepted accounting principles, or GAAP, in the Philippines. The PFRS are standards and interpretations adopted by the Financial Reporting Standards Council, or your FRSC. They comprise the PFRS, your PAS, or your Philippine Accounting Standards and Interpretations. PFRS are accompanied by guidance to assist entities in applying their requirements. A guidance states whether it is an integral part of the PFRS. A guidance that is an integral part of the PFRS is mandatory. So you might be wondering, what is the need for reporting standards? Okay, so for financial statements to be useful, they should be prepared using reporting standards that are generally acceptable. Otherwise, each entity would have to develop its own standards. If that is the case, every entity may just present any asset or income it wants and omit any liability or expense it does not want. Financial statements would not be comparable. The risk of fraudulent reporting is heightened, and economic decisions based on these financial statements would be grossly incorrect. For this reason, entities should follow a uniform set of reporting standards when preparing and presenting financial statements. The term generally acceptable means that either, first, that the standard has been established by an authoritative accounting rulemaking body, for example, the PFRS adopted by the FRSC, or number two, the, princip- the principle has gained several acceptance due to practice over time and has been proven to be most useful. Example, the double entry recording and other implicit concepts. The process of establishing financial accounting standards is a democratic process in that a majority of practicing accountants must agree with the standard before it becomes implemented. So we will discuss here the hierarchy of reporting standards. When selecting its accounting policies, an entity considers the following in descending order. First priority would be to use the PFRS. However, in the absence of a PFRS that specifically applies to a transaction or event, management shall use its judgment in developing and applying an accounting policy that results in information that is relevant and reliable. In making the judgment, management shall refer to and consider the applicability of the following sources in descending order. First judgment to be used should be, is the requirement in PFRS dealing with similar and related issues, or if there is no similar standard to it, use the conceptual framework. However, if these two are not present or cannot be located in either similar standard or in the conceptual framework, The management may consider the following. First, use the pronouncements of other standard-setting bodies, and use the accounting literatures and accepted industry standards. Although the selection of appropriate accounting policies is the responsibility of the entity's management, the proper application of accounting principles is most dependent upon the professional judgment of the accountant. So we have several accounting standards setting bodies and other relevant organizations. So let's discuss first the Financial Reporting Standards Council, or the FRSC. So what is the objective of the FRSC? Okay, so the council is the official accounting standard setting body in the Philippines, created under the Philippine Accountancy Act of 2004, RA number 9298. The FRSC is composed of 15 individuals, one chairperson who had been or presently a senior accounting practitioner in any of the scope of accounting practice, and 14 representative members. Next, you have your Philippine Interpretations Committee. This is a committee formed by the Accounting Standards Council, the predecessor of FRSC, with the role of reviewing the interpretations of the International Financial Reporting Interpretations Committee, or the IFRIC, for approval and adoption by the FRSC. Next, we have your Board of Accountancy. This is the professional regulatory board created under RA number 9298 to supervise the registration, licensure, and practice of accountancy in the Philippines. The BOA consists of a chairperson and 6 members appointed by the President of the Philippines. The board shall elect a vice person from among its members for a term of 1 year. Securities and Exchange Commission. This is the government agency tasked in regulating corporations and partnerships, capital and investment markets, and the investing public. Some SEC rulings affect the accounting requirements of entities and the adoption and application of accounting policies. Next here, you have your Bureau of Internal Revenue. This, this administers the provisions of the National Internal Revenue Code. These provisions do not always reflect the goals of financial reporting. However, they do at times influence the choice of accounting methods and procedures. The Bangko Sentral ng Pilipinas, or your BSP. The central bank influences the selection and application of accounting policies by banks and other entities performing banking functions. Last would be your CDA, or your Cooperative Development Authority. This cooperative influences the selection and application of accounting policies by cooperatives. Accounting policies prescribed by a regulatory body, like your BSP and your CDA, are sometimes referred to as regulatory accounting principles. The International Accounting Standards Board is the standard-setting body of the IFRS Foundation, with the main objective of developing and promoting global accounting standards. The IASB was established in April 1, 2001 as part of the International Accounting Standards Committee, or the IASC Foundation. The IASC Foundation is a non-profit organization based in Delaware, USA, and is the parent of the IASB, which is based in London. On July 1, 2010, the IASC Foundation was renamed to International Financial Reporting Standards Foundation, or IFRS Foundation. The standards issued by the IASB are the International Financial Reporting Standards, composed of the following: the International Financial Reporting Standards, the International Accounting Standards, and interpretations. The IFRS are standards issued by the IASB after it replaced its predecessor, the International Accounting Standards Committee, IASC in April 1, 2001. The IAS are standards issued by the IASC which were adopted by the IASB. The PFRS and PAS are based on these standards. So for the other relevant international organizations, we have here first our IFRIC. So this is a committee that prepares interpretations of how specific issues should be accounted for under the application of IFRS where, first, the standards do not include specific authoritative guidance, and number two, there is a risk of divergent and unacceptable accounting practices. The IFRIC is composed mostly of technical partners in audit firms, but also includes preparers and users. In 2002, IFRIC replaced the former Standing Interpretations Committee, or your SIC, which had been created by the IASC. All of the SIC interpretations have been adopted by the IASB. Next, you have your IFRS Advisory Council. This was also previously known as the Standards Advisory Council, or your SAC. This is a group of organizations and individuals with an interest in international financial reporting. The Advisory Council's role include advising on priorities within the IASB's work program. The IASB is required to consult with the Advisory Council in advance of any board decisions on major projects that it wishes to add to its agenda. Members of the Advisory Council are appointed by the IFRS Foundation, which also appoints the members of the IASB. These members are drawn from different geographic locations and have a wide variety of backgrounds, including users, preparers, academics, auditors, analysts, regulators, and professional accounting bodies. You also have your International Federation of Accountants, or IFAC. This is a non-profit, non-governmental, non-political organization of accountancy bodies that represents the worldwide accountancy profession. Its mission is to develop and enhance the profession to provide services of consistently high quality in the public interest. Membership to the IFAC is open to all accountancy bodies recognized by law or consensus within their countries. Last, you have your IOSCO, or your International Organization of Securities Commission. This is an international body of security commissions. Our Philippine SEC is a member of this commission.